Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, the handover is positive today, and that is important from the context of what we saw in trade yesterday, where you saw the 19,400 mark being broken, but we held above that mark at the end of the day. Of course, there was selling in the broader end of the spectrum.
Absolutely, though we've ended at a 1 month low as well, because Sensex saw cuts of almost 286 points in yesterday's session. Nifty around 0.5% lower as well. But clearly, if you go to see, there was that some bit of recovery as well that we were seeing ahead of close, almost 100 points recovery that did come in as well in terms of Nifty, whereas Sensex recovered nearly 300 points from the day's lowest level. So that last hour of trade was interesting to watch out for. And clearly you still have the Bank Nifty, which continues to underperform Nifty 50.
Yeah, and it must be said that despite the fact that the entire Asian pack was lower yesterday, and of course the handover from the US wasn't great, the Indian equity markets didn't fall to that extent.
We did hold on to gains, right? Yeah. I mean, if you see that correlation in terms of global markets versus India is not as strong as we used to see in the past, right? So probably earlier we would see times where you had US Asia fall almost 2-3%, and we would probably mirror that or be worse than that. Now the trend has slightly changed. Yes, we do see an impact, but it's not as material, and our markets are showing that kind of resilience as well, which is absolutely crucial. But clearly, except FMCG as well as IT, you had majority of the sectors which ended in the negative. IT is going to be interesting to watch out for tomorrow as well as next week, because you have earnings that will start trickling in, and you have the IT index which has outperformed Nifty in terms of the second quarter timeline. Though, as Tushar was mentioning yesterday as well, that we're not really expecting any outperformance from a performance or a quarterly perspective. So that's going to be interesting to watch out for. But apart from that, broader markets as well, we did see selling. 1% to 1.5% is the kind of cuts that we've seen in yesterday's session. Yeah. Today, it seems probably will be muted to flat. We might not see too much of selling pressure also come in, but a day of consolidation is what it looks
Perhaps
like.
On the other end, you could actually see some sentimental impact of crude sliding, and we'll be addressing that very shortly to try and understand what the latest triggers were. Of course, Brent crude trading just about $86, whereas last week we were talking about the possibility of $100 to the barrel.
But it was interesting to see that as well, Alex, because clearly when we spoke to analysts as well tracking crude, everyone was of the opinion that it will not really sustain above $100, though not everyone was sure that it will go down to this extent. But let's revisit that in a short while. But before that, I think the key is going to be in terms of the weekly expiry as well today. So Agam has more to give us. Agam, I mean, we are anticipating a day of consolidation, taking cues from what's happened in yesterday's session, the kind of recovery that we saw in the last hour of trade. What is the F&O data pointing out towards?
Right. Good morning, Hiral. Well, we're watching out for around 19,600 on the higher end. It's a 200-point range which keeps shifting, 100 points here, 100 points there. But consolidation is exactly what we've seen, because we've seen the markets take a step back and then take a step forward, and once again a step back. Yesterday, however, the Nifty did close at the lowest levels in a month. That said, as it's been pointed out, that it did recover significantly from its day's low. The question really is, are we expecting about a short covering to come through? At the moment, we're continuing to see some fresh shorts building in, but there could be a short covering rally, considering we have seen shorts building in over the past 2 to 3 days. In terms of levels, at least as far as today's expiry is concerned, we're watching, it's a 200-point range between 19,600 and 19,400. That's where the respective calls and puts have their maximum open interest. As far as your most active options go as well, the activity is around the 19,500 call and 19,400 put. That said, there won't be as much focus in the Bank Nifty, but as we shift towards the next week expiry, that's the 11th October expiry, 44,000 mark is really crucial, because that's exactly where everyone has been focusing on, and those are also the calls and puts where we've seen a substantial amount of increase in OI, thereby making it a very important level. So these are some of the levels we're keeping an eye on. But for now, it's going to be about 19,500 on the Nifty, and whether or not the markets are able to close above it and defend it.
Absolutely. Thanks so much, Agam, for that. Let's revisit this crude angle, because overnight, and I was reading a few articles that talked about the reason why you had yields in the US come off and the equity markets go up, because there was a private survey that was conducted in the US that pointed to the fact that companies are not adding jobs as quickly as was previously thought. So a bit of conflicting data in the US, whereas earlier in the week, you had a situation where there was a little bit of tightness that was being seen in the job market, but that was contradicted by this latest private report. Of course, market watchers are saying take that with a pinch of salt and wait for the data, the jobs data that will come out at the end of the week. But still, you saw that bit of a relief rally in the equity markets. And equally, there are updates in terms of crude inventories in the US, which had a bearing on the Brent crude prices overnight. Mika is joining.
And you had the OPEC Plus also come out with comments, right? So the combination is interesting.
Certainly. So let's look at all of those aspects. Mika is joining in to give us some perspective as to why there has been such a quick slide to the $86 per barrel mark. Morning, Mika.
Morning. So Brent prices have been on a rise, and from a 3-month perspective, prices have been up 12.26%. However, prices have eased down this past week, with Brent prices down 9.73% and crude trading around $86.07 per barrel today. Yesterday, on October 4th, Brent prices hit an intraday low of 5.69% and fell to $85.75 per barrel. This marked the first time they dipped below the $86 per barrel mark threshold since August 31st. This fall came after the Energy International Agency released its weekly status report, stating that US crude oil stockpiles hit their lowest level this year last week on robust export demand, and they also said the gasoline inventories rose higher than expected due to the weak demand. Crude inventories fell by 2.2 million barrels in a week ended September 29th to 414.1 million barrels, which is the lowest since December 2022. Supporting the decline, crude exports rose 9,44,000 barrels per day to nearly 5 million barrels per day. Additionally, crude stocks at Cushing, a storage hub for US crude futures, rose 1,32,000 barrels to 22.1 million barrels last week. This marked the first build-up in 8 weeks after inventories at the key storage hub dropped to the lowest level in a year the prior week. OPEC also said that it will maintain its oil production cut policy. This means that they will continue to maintain the oil output cuts to keep the supply tight amid concerns of decline in global economy. Consequently, Saudi Arabia will maintain 1 million barrels per day output cut till the end of 2023, and Russia will also keep its 3 lakh barrels per day export cut till the end of December.
Right. So with this, Mika, help us understand from a sentimental perspective, right? This is broad-based as to very informative in terms of how traders who are trading with crude, etc., need to react to it. But if you have to look at it from a stock-specific perspective, what sectors could potentially see a sentimental impact in today's session?
Well, you have the obvious ones, which are your upstream and downstream companies, these oil exploration companies and OMC companies, which have a direct impact. But other than that, you have your paint stocks, you have your tire companies, you even have your aviation companies that to a certain extent are related to the crude oil prices. So you would see, some sentimental
absolutely positive with regards to OMCs as well as the ancillaries that we're talking about. But with regards to upstream, it could be a slightly negative one as well, taking the numbers into consideration. Thanks, Mika, for getting us the details. So that's with regards to the overall gamut. Watch out for the likes of Asian Paints, Berger, you have your Oil India, ONGC, HOEC, a whole host of companies that will continue to remain in focus. And again, to be noted, this is more of a sentimental impact that we will see in today's session. But moving on, as we've been tracking the quarterly earnings just probably a week away, you have companies which have come up with their quarterly updates. One of the first FMCG companies that has come out is Marico. Sesa is standing by to get us more. Sesa, good morning. What is the quarterly data that has been released by Marico indicating from a trend perspective, and what could we expect basis that if you have to look at the earnings as well then?
Right. So we have seen, weaker commentary coming in from Marico on the Q2 top line. So the Indian business that comprises 77% of Marico's total revenue is expected to see a volume growth in low single digits, unlike expectations of high single digit volume growth, while revenue is projected to decline marginally owing to the price cuts it had taken in the edible oil segment. Over the last 12 months. Now, during the quarter, the company said that pickup in rural demand was not seen due to rising food prices and the below normal rainfall. It, however, expects consumption trends, particularly in rural areas, to improve in the ongoing quarter and the next, supported by improving macro indicators. The international markets, however, showed resilience in a volatile, global operating environment. It reported a double-digit constant currency growth. Despite the revenue and volume pain, however, the gross margins would see a robust expansion during the quarter on a year-on-year basis as prices of key inputs such as copra and edible oil stayed in a favorable range. Now, this is despite the company significantly ramping up advertising and promotional spends. So, a healthy operating profit margin expansion is also, likely to result in low double-digit operating profit growth for the company.
Right, so a couple of takeaways as well in terms of margin expansion that will be eyed as well as at an operating level. The profitability number is going to be key. Thanks, Cesar, for getting us the details. So we will be eyeing a Marico and let's see what the impact will be in terms of other FMCG players. But Alex, apart from these two more names that have just come up with their quarterly update is from the real estate space. You have a Soba, an interesting one there because clearly almost a 50% increase in terms of the total sales. And from a value perspective, if you go to see, it's a jump of around 32%. Average realizations have also improved around 17 to 18%. So Soba will be in focus. And with a macro tech developers, the key highlight over there is more, the pre-sales and collections are in that lower double digit. But interesting is that the debt has gone down by almost 23%. And since they listed as well, the major concern that everyone had with the macro tech, which is Loda, of course, is a ballooned balance sheet in terms of the debt profile, right? Yeah. That is going down, so that will probably be a key positive as well with regards to macro tech. So let's watch out for these two. Yeah. And thirdly, how Puravankara continues to react as well because of the IT rates that we've been hearing of yesterday. So that could probably see pressure. So that 3 to 4 stocks from the real estate pack that will be in focus today.
Certainly. All right. So there you have it. Quite a list of stocks that we have already. But sticking with the theme of quarterly updates, let's also take a check of a few banking and financial names that have reported their quarterly updates. And this is perspective, of course, in terms of the pace of lending that these entities have generated as well as the deposits. Let's bring in Himansh to give us the latest here. Himansh, morning.
Hi, good morning.
What are you picking up?
So we'll start off with PSU Banks because they have been in the limelight after the quarter one updates, and Punjab National Bank, which released its pre-quarter yesterday, has been in focus because it reported a doubling of profits last quarter, and let's see if the momentum continues. But so it has reported a CASA uptick of about 2.6%, and the gross advances and deposits also show a healthy growth. The cash to deposit ratio also improved by 262 basis points and now stands at 72%, which is a healthy thing considering you're lending out more. Credit to deposit ratio, that is actually. RBL Bank as well is poised to capitalize on the lending, increased lending ahead of the festive season, as well as benefiting from other spends. Operational expenses are generally expected to be higher across banks given the increasing in branch openings. Now, talking about RBL specifically, the total deposits were up over 13%, and the CASA ratio as well was up 35.7% this quarter. The Jammu and Kashmir Bank, the CASA ratio noted a slight dip, 50.61% versus 53.29% last quarter. The gross advances have been up by about 15-16%. Bandhan Bank as well reported softer growth in deposits, about 12.8%. As per Nomura's note as well, they are watching out for a NPL push over to the tune of about 1,300 odd crores, but they are awaiting management clarity on that. So let's see if the management clarifies that in the audited Q2 updates. Now, coming on to L&T Finance, the retailization of the portfolio is estimated at 88% for this quarter, which is very well ahead of the Lakshya 2026 goal of over 80%. And retail disbursements were also up. Notably, from this retail disbursements pack, SME finance stood out, which quadrupled over the last year, and the retail loan book is also up about a third, 33% year on year, almost touching 70,000 crores. So that's the summation of the banking and NBFC pack with the pre-quarter releases.
Thank you very much for getting us the details. So interesting lists that we will be tracking in today's session. But apart from that, a lot of other companies that will continue to remain in focus today from the pharma pack as well, which Varsha has been tracking pretty closely. Overall, if you go to see pharma, it's been a pretty volatile ride, I would say.
It's a bumpy ride, yes.
I mean, you see a good up move, but then suddenly you'll see some bit of selling pressure that does come in. Let's understand from Varsha which are the stocks that are in focus today. Varsha, good morning. What are you tracking?
So let's start with the healthcare segment. So first we have Healthcare Global Enterprises, which is a cancer care network in India, which has announced the strategic acquisition of SRJ CVC, a cancer hospital in Indore. Now this acquisition marks HCG's entry into the key geography of Madhya Pradesh, and a company plans to expand by adding 100 beds and state-of-art cancer diagnostic treatment facility within an estimated operational timeline of 2 years. Now, with its entry into the 10th state, HCG is now a network of 21 comprehensive cancer centers with 24 hospitals across India and Africa. Then we have Strides Pharma, which has announced that its step-down wholly owned subsidiary Strides Pharma Global has received approval for EET tablets from US FDA. Now they are used in HIV treatment and has a market opportunity of almost $7.5 million US as per IQVIA. Now next, let's start with IT pack, where you have Nazara Technologies, where the Singapore subsidiary of Nordwind Gaming, a South Asian gaming and sports media company, which is a subsidiary of Nazara Technologies, has acquired 100% stake in gaming marketing agency PublishMe. Now the consideration is $2 million US. Now this is to be acquired from its existing shareholders, Nazara Technologies Limited and Ozgor Ozlab. Now upon completion of this transaction, PublishMe will transition from being a subsidiary of Nazara Dubai to become the wholly owned subsidiary of Nordwind Singapore. The move is expected to bring new growth opportunities and broaden Nordwind's gaming global presence. Then lastly, we have Axicats Technologies, where company has appointed Abid Ali Neemachwala as chairman of the board. Now he was earlier the CEO and managing director of Wipro, and Mr. Neemachwala successfully led the company, and under his leadership, Wipro's digital business grew 40% of overall revenues at a 35% CAGR over his 5 years term.
Okay, so quite a few interesting updates there as well. Thank you so much, Varsha, for bringing us those details. Now, apart from all of that, the defense pack as a whole is going to be in focus, because the latest update, of course, is that the 5th positive indigenization list has been released by the Department of Military Affairs. We've got Saloni to talk about the list of stocks that you need to watch out for from that pack. Significant update, Saloni. What do you have for us?
Right. So yesterday, in order to promote Atmanirbharta in defense and innovation, the Ministry of Defense released the 5th positive indigenization list that consisted of 98 items. So this list consists of highly complex systems, sensors, weapons, and ammunition. And all these items will be procured from indigenous sources in a staggered timeline. So the companies that stand to gain are your large caps such as L&T, Bharat Forge, Adani Defense, Tata Defense, as well as the mid and small caps such as Astra Microwave, Data Patterns, Paras Defense, and Idea Forge. But more about what happened. So this list, the 5th list, it lays special focus on import substitution of components of major systems which are being developed and likely to translate into firm orders in the next 5 to 10 years. So this is the 9th PIL that has been released till date, in addition to the 4 PILs released by the Department of Military Affairs that comprises of 411 military items, and 4 PILs released by the Department of Defense Production that consist a total of 4,666 items. So it is encouraging to note that various reforms that are being put in by the government. So the industry and especially the private sector is gaining confidence and building capability to manufacture and integrate highly complex systems and weapons. So besides recognizing the growing capability of domestic industry in defense manufacturing, the PILs have signaled a strong resolve to promote a robust and self-reliant defense industry and cut down imports. It also recognizes the fact that the defense sector will be one of the key contributors to the nation's economy and growth in the next 5 to 10 years.
Right. I mean, from defense, thanks Saloni for getting us the details. From defense, we're going to shift to a very, entertainment focused, probably, I would say that segment, which is you have the World Cup that starts today. Saloni, you've been tracking it pretty closely in terms of what the financial impact will be, because for all of us, it's England, New Zealand today. Sunday, we have India who's playing as well. So I think both the days are absolutely important. But how are you looking at it? What are your findings with regards to sectors as well as companies, that will probably stand to benefit on the back of the World Cup?
Right. So as you spoke about it yesterday, that we have estimated a conservative impact of $1.6 billion that is going to boost the consumption in India. So it should bolster demand in 5 key sectors that are aviation, hospitality, F&B, media and advertising, and tourism. So companies that are operating in the aviation sector will stand to benefit due to the uptick in passenger traffic that will result in a spike in the airfare for the 10 cities that are hosting the World Cup, as well as the augmented revenue from airport fees, duty-free shopping, and various ancillary services. So you have your airlines such as Indigo, Jet Airways, SpiceJet and Air India that are standing to gain, as well as GMR Airports Infra and Adani Enterprises that own and operate these airports, as well as Dreamfolk Services, which is an airport service providing company. Next, you have your hospitality sector where the companies will stand to reap the benefits. So there have been reports of prices for bookings during high-stake matches such as the India-Pakistan clash, surging 8 to 15-fold, and occupancy rates in hotels that are nearing almost 100%. So your local hotel chains such as IHCL, EIH, Chalet, ITC, Lemon Tree, among many others, are well positioned to capitalize on this. And then there is a whole host of companies in the F&B sector, ranging from companies that are operating QSR such as Jubilant and Devyani, food aggregators such as Swiggy and Zomato, and beverage companies like Varun Beverages, United Breweries, and United Spirits that are standing to gain, as people not only in the stadiums but the ones that are watching matches from their homes as well are looking to order food and beverages to enhance their experience of watching the matches. And then in the media and advertising sector, you have Disney Star, that is the official holder of the broadcast and digital media rights for the tournament, that is standing to gain, as there are reports of ad agencies anticipating that the company is to accumulate 4,000 crores in advertising sales during the World Cup period. And the last big gainers from this event are your tourism companies such as Easy Trip Planner, Yatra, and Clear Trip, as tourists will be flying in. As tourists who are going to be flying into the country will look to make the most of their stay here by flocking to India's hotspots and in huge numbers, which will give a boost to tourism.
All right. Well, it's quite the pact that we need to watch out for. But more importantly, I think a lot of attention is going to go to the match itself. Thank you so much, Saloni.
But one of the disappointments I had, Alex, was that there was no opening ceremony, right? I mean, yesterday I was looking forward to it from 7 in the evening to 8:30 till I realized that they're not really going to have an opening ceremony.
So let's see if the fireworks at least are on the pitch. And that kicks off in just a short while. So we'll all be gearing up for that. In the meanwhile, we're setting up for markets, which will open in just a few minutes. So do stay tuned for that. You'll find all of the action right here on BQ Prime.